Hi everyone, in this video I'm going to talk about the profit and loss account. So our learning objectives is to find out the net profit and also finding the difference between our operating expenses and the income. What is a profit and loss account? We are saying this is a final account or a statement prepared by the business at the end of a trading period to determine the net profits or the net loss of the business. We're saying at the end of the trading period because in the first video we looked at how to prepare trading account and that's how we got our gross profit. So we go ahead to prepare the profit and loss account. It begins with the gross profit or the gross loss transferred or brought down from the trading account. So we shall bring our gross profit brought down, the one that we got from our trading account, or if we got a gross loss, we shall also bring it down. What are some of the elements of a profit and loss account? Items we shall include in our profit and loss account. 1. Gross profit, as we have said, or a gross loss. This is transferred from a trading account as balance BD, BD standing for brought down. Then another item is operating expenses, and we're saying these are the costs incurred by the business on services that help in the normal operation of the running of the business. As you're operating your business, there are some expenses you're going to incur. There are some expenses you're going to incur. So we also call them indirect expenses. Such expenses include transport costs. You're going to pay for electricity. If you don't have your own premise, you pay for rent, you pay for insurance, carriage outwards, salaries, water bills, postage, discount allowed. It's us allowing a discount, so it's going to be an expense to the business. Advertising and communication, among others. These ones we call them operating expenses or indirect expenses. So they are not directly related with the sale of goods. They are indirect. So as we are selling our goods, we consume electricity, we pay for water bills, so shall include such items. Other items include supplementary incomes. This refers to all income or revenues that the business earns from other sources other than the sales. Sometimes your business is going to incur or to earn, other incomes other than from what you're selling. Examples include discount received. You went to Chigali, you bought some goods, and because you bought them in bulk, you're going to be given a discount. So it's an income to your business. Commission received. You're selling some chapatis and then they give you a commission on whatever you sell. That's an income. Rent received. Bad debts recovered, to mention but a few. Then the net profit or loss, because here in our profit and loss account, our aim is to find our net profit or the net loss. So this is the excess of the gross profits over the expenses of the business at a given period of time. So the equation B, net profit is equal to GP plus the supplementary incomes minus all other total expenses. Let's look at one example, the format. So not forgetting again the title, profit and loss account for a given year, maybe 2008. We shall have one column for particulars, another for amount, particulars, amount. But sometimes you have two columns: particulars, amount, particulars, amount. So on the debit side, as you know, we record all our expenses, and on the credit side, that's where our income and revenues will go. So we shall have salaries carried outwards. All these are expenses. And then on the other side, as we said, we start with the gross profit brought down, then you add other incomes or revenues received. Then after you sum it up, you make it balance. So if the credit side is greater than the debit side, we shall get a net profit to make it balance. But if it's vice versa, then we shall get a net loss on the credit side. Example: Gashola traders made a gross profit of 370,000 francs during the year ending 31st December 2009. They had rent worth 60,000, insurance 20,000, advertisement 25,000, wages and salaries 40,000, stationery 50,000, and discount allowed 10,000. Rent receivable 80, discount received 15, and then what are we being asked? Required, prepare profit and loss account using the T format. So we shall have our less operating expenses. As we said, don't forget the title, then put details, amount, details, amount. Shall start with the operating expenses. On the debit side, we have rent 60,000, insurance, advertisement, wages and salaries, stationery. Then on the credit side, as we said, you start with the gross profit brought down, which is 370, add other incomes or revenues where we have rent receivable, discount receivable, then you continue like that. Then from there, you're going to balance your total expenses. Here we're saying it's 205 and our gross income is 465. You're seeing our income is greater than our total expenses. So to make it balance, we are going to get 465,000 minus 205, which is going to be our net profit of 260,000. And then we come to 465,000, 465,000. Hope everything is clear. So that's how we do it. Can you try out this example? An AI's business showed the following balances as at 31st December 2012. So you're given such a question and you're asked to prepare an income statement. Now this time around, it's 2-in-1. In the first video, we looked at how to prepare a trading account, and now in the third video, we are talking about profit and loss account. So you're combining the two. You will start with the trading account. After getting your gross profit brought down, you continue with it in the profit and loss account to get the net profit or the net loss. So another way, the vertical format, the other one was the T format. Now with the vertical format, we have details, amount. It's vertical. So here, when we're preparing our income statement, we start with the sales XXX in the second amount. One would ask, why are we putting it in the second column? The first column is for any item that has additions and subtractions, then we take to the final column. Then we shall have our sales XXX, less sales returns XXX, then we shall come to our net sales. When we subtract that, we come to our net sales, of which we have mentioned A or named A. Less cost of goods sold, where we have our opening stock, and we are taking it there because it has no additions or subtractions, XXX, and we're calling it B. Add purchases, XXX. Wages, so these wages, we said when they are wages alone, we assume you incurred them when you're purchasing these goods. You paid some casual workers to load the goods onto your vehicle, so we're going to add them onto the purchases. Carriage inwards, XXX. Then when you get that, you come to XXX. Less returns outwards. Then we come to our net purchases, which is C. So how then we shall get goods available for sale. And how do we get the goods available for sale? It's B plus C. You come to our goods available for sale. Then less the closing stock, which is XXX, and we come to our cost of sales, which is D. And then A minus D is equal to E, which is our gross profit. That is the first part of the trading account. Let's look at the profit and loss account continuation, because we are asked to prepare an income statement. So we shall add here add miscellaneous incomes, commission received, discount received, gross income, get the total there, which is F, plus the gross profit, not forgetting the gross profit. Then less operating expenses, rent and rates, insurance, accruals, bad debt, stationery, and then where we shall get H as our total expenses. And then the difference between G and H is our net profit or the net loss. That is that. So thank you for your kind attention.